Welcome back. We've got Nitin Raheja also joining us now. Nitin, good afternoon. Let's start off with Reliance because this one seems to be making quite a comeback, has been the last couple of sessions, gradually gathering momentum again. Just when we thought perhaps it was losing a bit of luster towards the end of the year.
Yes, I think, there was some amount of profit booking that came in. I mean, look, it also got into a consolidatory phase for some time. But, if you talk and see what is happening from a Reliance perspective in a long-term perspective, the evolution of the company and the direction in which it is driving on it, also the way foreign investors are perceiving it. For most people, in most portfolios, it was standing out as a long-term buy. There would be some amount of consolidation that would probably take place from time to time. So, not really surprising from what we are seeing there.
Okay, what about Tata Motors, Nitin? Also want to get your view on that. This is another one that's been on a roll. Partly also due to the JLR turnaround, another 6% coming in today on a Tata Motors.
So Tata Motors was, for a long time, in a category where it sort of had this whole double whammy, if you remember, the whole China slowdown, COVID happening in the UK and the impact of on JLR, and the fact that commercial vehicles have been struggling in the last few years. What we have seen has been actually, all three parts of the story starting to look more and more positive. China has come back strongly, and despite worse fears, continues to be among the fastest growing economies in the world. The whole Brexit event is now behind us as such. And, on the commercial vehicle side, what you're seeing the initial signs of recovery starting to show up. Most brokerage houses have got positive on it. We are talking of the whole medium and heavy commercial vehicle segment seeing a virtuous cyclical upturn over the next few years. On the PV side, the cars have done reasonably well. So I think all in all, Tata Motors seems to have hit a good patch as far as its business fundamentals are concerned. The stock was so undervalued and has been out of favor for so long. To see a bounce back of this proportion, we've seen that happen so many times whenever a stock is underowned and undervalued as such.
Right. Kunal, I want to revisit the charts of Reliance, in fact, since we're on the subject. And you've talked about as to how you see higher levels. What is the strength the last 2 days telling you?
I think it's a good strength for Reliance Industries. And, the last few days, we saw the stock just trying to struggle around the 50-day moving average. In fact, in the morning also, I mentioned that, the stock tends to have a tendency of coming very, very close towards its 50 DMA. But somehow the, momentum just absolutely fizzles out. And you see the stock, making, a fresh, I would say, a downward drift and coming back into this consolidation. So one thing is now clear that the stock is now crossed above its 50 DMA, and that's been on a comfortable basis, at least as of now. Assuming if the stock closes at this 2015-2020 level, it could also confirm a price range breakout for Reliance Industries. There are a lot many other weekly chart and monthly chart parameters which also indicates that there are some strong momentum indicator breakouts, and these happens when you see the stock consolidating for almost 2 months, 3 months on a trot. And then when you see a sudden rise and a pickup in momentum, a pickup in momentum on the longer term charts generally has more positive effect into the stock price. It generally sets the tone for the stock price trend, not from a 1-2 day perspective, but it sets the tone for the stock price for the next at least a couple of weeks, if not more. So on the backdrop of all of this, I think what you're seeing today, for Reliance Industries is a good start. Is a good possible start for a fresh uptrend for itself. I think as and how the stock goes along, I'm of the view that there would be a lot many buyers who should come back into this stock price. So when it had remained into this consolidation, now that Reliance is coming back to being a strong market performer, I think I'm certain that the volumes will also try and make a strong comeback.
Okay, that's the day coming in Reliance. IT, though, is a little bit on the sidelines. I won't say any weakness coming in here, but Wipro, Techem, Coforge, these are the ones which are sitting on the sidelines. Although Mindtree had a great session start, reacting to its numbers. Let's check in on what Mindtree is up to. It's eased off from the highs, but still going good by about 1% or so. Kunal, just the inherent strength that one has seen in IT, even on the days that the market has fallen, IT has been the first one to recover and has seen buying at every given dip. Where within IT would you recommend a fresh buy?
So I still believe, Aisha, that large cap stocks in IT space will probably offer more, not just safety, but I think in terms of higher probability of returns as well. I think that's a much more better, I would say, subsector within IT to look at. I, for one, believe that the Nifty IT index, in fact, last week on the Chartbuster segment as well, I'd mentioned that how the Nifty IT index has come back into such an overbought territory, which has historically happened 3 or 4 times. And I'm talking the last 15 years for the Nifty index. And whenever such overbought nature of indices have shaped up for the Nifty IT index, it's resulted into a multi-month cool-off. Not a major price correction, but a time-wise correction. So my sense is that when you are going through a time-wise correction, and when you have a backdrop of such a strong returns from large caps and mid-cap IT stocks, it's bound to be that the ones which have rallied the highest would probably try and retrace the most. So I think in that aspect, mid-cap stocks can probably retrace much more than the large cap names, and which is why I believe specifically looking at large cap names could be a better prospect for someone who's wanting to start off with investing into the IT space. I believe TCS and Wipro are the 2 large cap names which one could look at even at current levels. And I think if there are any significant dips which happen along the way, I think stock like Coforge and Mindtree could also offer some great opportunities.
All right, let's also go across now to Vinny. She's taking a look at the latest report from CLSA on Tata Motors. Vinny?
CLSA has maintained a buy stance on Tata Motors with a target price of Rs 290 per share, and Tata Motors is surely the top pick in the auto sector for 2021. Now, what is making them so bullish is one, obviously the expectation of the JLR turnaround, and they think there's a building confidence of a turnaround which could lead to a valuation re-rating for Tata Motors. Overall, they expect a sharp recovery in volumes and the JLR mix, along with obviously the cost cuts which the company has been taking. And the India business, they expect a cyclical recovery, especially in the commercial vehicle space, as well as the market share gains in the PV is something that could drive overall the EBITDA margins of the company, surely, and taking it to 7% for FY23. So surely a positive sign, and growing confidence in the credibility of the management to execute this turnaround is making a bull case for Tata Motors by CLSA. They believe that, in the bull case, they expect overall a resultant valuation could be at around a price of 104% upside from the current levels, while in terms of 72% higher than the base case scenario as well. So even the base case scenario is showing such a good growth, and what they expect due to the overall positives and bull case like JLR volumes better, improving volumes, as well as the better FCF multiples, as well as the India better margins led by obviously the increase in valuation and overall commercial vehicle space improvement as well. So let's keep an eye out on Tata Motors on the base of CLSA note.
Okay, let's also take a look at Chola Finance. We've got some rejig at the top with the MD resigning. Varun's taking a look at what is in store now at Chola Finance. Varun?
Well, that's right. Abrupt change of leadership at Cholamandalam Finance. Mr. Alagappan, who's the current MD, is resigning ahead of schedule. The last day of work will be February 14, 2021, while it was supposed to be FY24. Now, brokers are not really concerned about this because the Murugappa family is known to shuffle leadership positions within the group quite often and abruptly. It's happened at Chola before, and the last time it happened, there was no material impact on business. There's a very seasoned second bench. So the current CFO, VE head and VF head have all had decades of experience within Chola. So they're a very capable team and can handle what needs to be done from a leadership standpoint. What's also a cherry on the cake is that the man who's now the chairman of Chola since November 20th, with Subaya Velian is no stranger to the street. We've all seen what he's done with Tube Investments, what he recently did with CG Power, and of course, Chola has been one of the best performing NBFCs since March. 140 rupee stock has become 400 rupees. So outlook remains bullish on this company. Leadership change a bit abrupt, but given that it's quite routine, nothing to worry about as far as the brokerage and investor community is concerned.
Okay, that's the take coming in currently on the rejig that one has seen across the Murugappa group. But Nitin, just wanted to get your sense on how the disinvestment and the OFS spree within the PSUs is panning out and whether they make or merit a case for investment.
Well, selectively, surely, let's look at this. A lot of these PSUs have had a lot of inherent strength in the businesses that they are in the segments that they have been. Some of them have also, had years of sort of track record and so on and so forth. What has, however, affected these PSUs in the past has been the interference as far as the leadership or the government has been concerned. In terms of whether how capital allocation has been done at different points of time in these, and the speed of decision making, the aggression, and so on and so forth. That has been the fundamental factors which has weighed over these PSUs and has sort of acted as an overhang on valuations when its peers in the private sector have actually got far superior valuation. So yes, there is an attractiveness as far as the valuation of a lot of these PSUs is concerned, and I think the government is simply capitalizing on the markets and its present conditions to try and raise as much capital as they can, because the big ticket items are taking time, as we have seen in the case of BPCL and so on and so forth. So it's they're doing these smaller tickets and a number of these small tickets ones and sort of trying to raise as much as they can. So I would look at them, on a selectively. Also, further, what I do is I classify these PSUs into two categories. So you have these new age PSUs that you have, so as like the PFCs of the world or the IGLs and so on and so forth, and then you have the older age PSUs. Some of these new age PSUs actually have done well. They run very well and professional. They attract good talent. So yeah, and as we saw. Some of them have good business model, like IRCTC, which got listed, has given humongous returns for shareholders. So selectively, I think, yes, one should look at some of these PSUs from an investment perspective. Also, the government seems to be now putting more and more onus as far as accountability is concerned. So that is a big positive. So, most definitely, I think I would look at some of these non-banking PSUs on a selective basis.
Non-banking PSUs on a selective basis, that's the word coming in from Nitin. But a big setback for Hindustan Unilever, as the Bombay High Court has now allowed Sebamed to continue using the ads with Dove. The High Court passed an order today, and in that it modified its previous order for restraining Sebamed's ads completely. Priyanka Iyer, my colleague, joins in with more details. Priyanka, help us understand the order by the High Court.
For HUL that the Bombay High Court has allowed Sebamed to continue airing the ads which have Dove in them, comparing Dove's pH levels to Sebamed's pH levels. The only issue that Bombay High Court has had is that there's a comparison between Rin and HUL soaps, so those ads have to be taken down by Sebamed. So there is partial relief coming in as well. But from what we understand, according to the Bombay High Court order, Sebamed can continue comparing its soaps with Pears and Lux if the comparison with Rin is taken down completely. So that is what we're understanding. Remember, early on there was an ex parte interim order that had come in where Sebamed was not present in court, and the Bombay High Court had said that all ads by Sebamed should be restrained till further arguments take place. And after the arguments from both sides were heard, this is the conclusion that the Bombay High Court has come to. They have said that all ads have to be taken down immediately where Rin comparison exists, but 10 days are given to take down the hoardings. HUL, we understand, is likely to go to the divisional bench of Bombay High Court to challenge this order. We will have to see what happens on that front. We reached out to HUL. They said we are awaiting a copy of the order from the High Court. We'll have to see how it goes further, but it seems like the matter will drag in court further as well.
All right. Lots of news to track there across the segment on some of those names. Just taking a look at now at what else is moving in trade and where we're seeing action. Interglobe's up 4%. Tata Elxsi has just been on a roll. DLF, we had another 4-5% gain coming in there. So some of these have just been constant. L&T is looking good today as well. We've got some of the housing finance names or NBFCs also seeing a little bit of a spike. Cipla, 2.5% on a Cipla in today's session, and some of the other financials also holding their own in today's session. Let's take a look at some of these financials. L&T Finance 7-8%, Chola's up 7-8%, the Bajaj Twins, and then we've got the usual Shriram Transport, for example, that's also on the list. But some of these mid-cap NBFCs, Nitin, are seeming to have a pretty good run in today's session.
They also had corrected quite a bit. I mean, if you look at, say, for example, if you look at a Bajaj Finance, there was almost close to a 10% correction that had taken place in the stock. So I think they are in line with the market coming back. They are also bouncing back. So, my own view on this whole pack has been that I think stick to the larger names within and stick to people, the NBFCs who have a very strong domain leadership. So whether there's somebody in the CV leadership space and is substantially large, or someone in gold finance, or if you're doing a broad spectrum NBFC, then really stick to the big ones like a Bajaj Finance and so on and so forth. So I think this is a period where for most NBFCs consolidation is going to increase, and it's going to be a market share grab that is going to happen for the larger names, primarily because they are the ones who are able to raise capital at very competitive prices, at cheap prices today. Some of the other ones, we've seen this market which is flush with liquidity, with interest rates at all-time lows, but yet there is a large cross section who is not able to access these prices or that level of liquidity. So it's the large and the strong ones who are going to get bigger and bigger.
Kunal, what about on the charts, and given the kind of action that we're seeing today?
Yeah, well, Abba, I for one believe that there's a new trend in the making for the financial services name, and it's not atypical that we've seen the mid cap end of the financial services stocks which have done pretty well for themselves. Large cap stocks like Bajaj Finance had a fantastic in the month of November and first half of December. Then the stocks, typically they remain sideways, went through a phase of correction, and well, now these stocks are making a good comeback. So I for one believe that this is a sector which could buzz up quite strongly. You should see strong pickup of market participation as well into these names. And typically we've seen that financial services name are pretty high beta in nature. So when they move into swift periods of uptrends, these stocks can traverse 15%, 20% in a very short kind of a time span. So I think looking at the market texture, the risk appetite of market participants, the risk on ability, the stability across the globe as well, I think on all of those fronts, I think the financial services stocks, what they're showing today, I think is the sign that I believe that there should be more positive days for these stocks. Bajaj Finance is one primary stock which I believe one should be looking at current levels. The stock is nearing a breakout yet again of that psychological 5,000 plus mark. So I believe even at current levels, the stock looks ripe for another 300 to 350 points on the upside in the very near term.
Okay. Kunal, thanks for that. We're going to take a very quick break, come back and discuss more of those movers. Do stay tuned. Back in a minute.